ServiceNow announced its Q1 fiscal 26 earnings last week. They beat in a lot of different areas. They had 20+% growth. Now stock still took a hit. I'm not going to go into that too much. It's not really my focus, but I will tell you that obviously they're paying attention, so customers should be paying attention. And the financial community is definitely paying attention. But let's get into some of the numbers, and I'm going to talk a little bit of some of the key things that were said during the earnings call as well, because that is really important to consider when you are thinking about planning for your renewals, your in-term purchase buys, your AI consideration, roadmap building, and many of you are probably going to Knowledge next week, which I will be there. And so a lot of the things that were covered during the earnings call are likely going to be all over the place there, as well as the fact that their financial analyst day, which they mentioned numerous times during the earnings, is next week as well. So there'll be more information coming out tied to that, which I will have covered. I'll be sharing my thoughts on. So the numbers: total revenue, $3.77 billion, up 22%. Analysts were expecting about 3.75, so a slight beat there. Subscription revenue, which is the bulk of it, was $3.67 billion, up 22%. Again, a slight beat on what the analysts expected. They thought it'd come in around 3.65 billion. That also, the subscription revenue that they got was actually higher than the high end of their guidance that they gave going into the quarter. Now, as you know, they always talk about number of transactions that were closed. They had 16 transactions over $5 million in net new annual contract value and ACV. That represented 80% growth. They now have 630 customers that fit that criteria of $5 million or more in annual contract value. That's up 22%. The average of that group is 14.9 million. Now, I always give these numbers because if you think about when you're approaching ServiceNow and how they look at you, they slot you based on how much you're spending, and you already knew that. But obviously, as you get closer to 5 million, that carries weight because that'll funnel you into this pool. I talk about this all the time. There's massive leverage. There's massive benefit to ServiceNow, your sales rep. So make sure they're giving you what you should relative to negotiations, commercial terms, so forth and so on. Now, another thing which I'm going to talk about in a minute is they said that 50% of the net new business comes from non-seat-based pricing, right? That's consumption-based, essentially. Let's talk AI. Number of Now Assist deals in Q1 over $1 million was up 30%. Now Assist customers spending $1 million or more in ACV is up 130%. And that's important, right? Now Assist, they have new packaging. I understand that, which I've spent time on, I've written about. I'm going to put more commentary out there. But essentially, that's their AI offering. There's number of assists that you draw down on. That's that non-seat-based pricing that I just mentioned a minute ago. It's obviously critically important as they push AI. And now that they have repackaged everything to be AI-enabled, AI is part of all deals to a certain extent based upon what packages. So I fully expect this type of reporting to continue to become important to the financial community, but to your sales reps to be able to feed into it. So guidance. So they actually raised their full year fiscal 26 guidance. They are thinking it's going to come in around 15.73 to 14.77 billion for the full year, which would be about 22 to 22.5% growth. Previously, they were expecting about 20.5 to 21% growth. So a raise, right? Not significant, but still a raise. So they obviously have confidence in pipeline. There's other economic conditions that impact that, certainly. But this is something that you're mindful of as your customer because they're in a position of strength. But they also need to meet this raise, right? So, and they often want to beat what they suggest their earnings are going to be for the full year. So think about that as well, how you may impact that. And then this is important. On the Now Assist part, during the earnings call in a couple places, they mentioned the fact that they're on a trajectory now to exceed $1 billion, right? That was their target for FY26. They now think they're going to beat that. I think they threw out a $1.5 billion number out there. So again, they're putting a marker out there, and if you are adding seat packs or assist packs, if you are adding Now Assist for the first time, if you're going down the particular package option that includes Now Assists, massive leverage. So you have to make sure you leverage this moment in time, important, to get the right deal. The cost profile, the discounting, the volume discounting, the transparency, all things I've covered in previous posts. Now, I don't usually spend too much time reading the full quote, but there was two that were really important when you talk about the packaging, when you talk about consumption-based pricing, you talk about the flywheel effect. You got McDermott. He even said, look, I know you're all interested in the progress of our hybrid business model, especially with regard to consumption pricing. You'll be happy to note that 50% of our net new business now comes from non-based pricing model, right? That's what I just told you. He hit that right on the head. He also continued to talk about the fact that this hybrid model gives customers the best of both worlds. Predictability, foundational seat licenses combined with usage-based scalability. Now, again, that's all well and good. But again, if you don't have that transparency, if you don't have the estimates, if you don't have understanding of what happens when you blow through your assist packs and what the cost profile is going to be, with all due respect, that scalability, that foundational component of predictability goes out the door, right? Yes, there's still a unit-based, a seat-based, fine, but let's be honest, that gets quashed by the fact that usage is going to go through the roof and you're going to owe money that you weren't expecting. He also mentioned in that same quote, we continue to see the hockey stick taking shape. Hockey stick is the whole goal around consumption-based. Start here, elevate revenue like this. That's the goal. That's what they're telling the financial community. That's how they're going to try to turn around and continue to accelerate growth and get the market back to where they want them to be, the financial market. Now, Chief Product and Operating Officer Zavri jumped in. He said, AI capabilities are in each of our SKUs now. That is the AI embedding announcement that happened last week as well, or earlier in the month. So in other words, what we did with Pro Plus, which was a higher SKU with Assist, are now available also for the foundation and advanced SKUs. Okay? So in other words, those tiers of their packaging have it in it. It's part of the deal. So again, you have to drive transparency. You have to drive understanding. You have to talk to them about, that's great that you've embedded AI, but what if I'm not going to use it? And if I start using it, what does that mean for me? This is critically important. So they may have packaged it and made things AI enabled, but it doesn't mean it's going to be of value to you. And if it is of value to you and it's forced into your licensing, you have to force them to give transparency and protections and pricing appropriately, period. Because clearly this is where they're focused. So that's the theme. If you have renewals in 2026, they're going to be aggressively pushing Now Assist. They're going to be aggressively pushing you through their packaging, through transactional means to get what they want. And that's okay. But you have to make sure you negotiate those deals right. But first and foremost, force transparency, force understanding of for today and for tomorrow.